BioCentury this week is brought to you by Evotec. Evotec is a life science company pioneering drug discovery and development by integrating deep disease expertise, AI-driven innovation, and advanced technologies. Working across modalities, Evotec's fully integrated R&D value chain and flexible partnering models accelerate the journey from concept to cure. A key area of focus is cell therapy, where Evotec leverages cutting-edge iPSC technology, manufacturing know-how, and translational capabilities to deliver scalable, off-the-shelf solutions for complex diseases. From discovery through GMP production, Evotec supports the development of cell-based therapies, advancing regenerative medicine and bringing transformative treatments closer to patients.
The fourth quarter has begun for biotech with a familiar feeling. Indicators once again point to an improving public market for biopharma companies, but we are still under a cloud of political and regulatory uncertainty, and no one among the buy-siders we have spoken to is willing to declare this moment biotech's return to sustainable growth. On today's BioCentury This Week podcast, we have Stephen Hansen dialing in from the UK with our fourth quarter preview. And from Washington, the US Senate is moving to limit access to Chinese CDMOs. And you may have heard, pharmas are coming to the White House to sign deals under the most favored nation drug pricing policy of President Trump. And billion-dollar biotech deals are back. Novo and Bristol Myers had a busy week. We take a look. I'm Jeff Cranmer, and joining me on the BioCentury This Week podcast are my colleagues.
Simon Fishburne, Editor-in-Chief.
Steve Usden, Washington Editor.
Stephen Hansen, Director of Biopharma Intelligence.
Stephen, you spoke to all your usual buy-side contacts over the past few weeks. What did you learn?
Yeah, thanks, Jeff. Well, we titled this quarter's preview Deja Vu All Over Again. And I guess first I wanted to ask Simone, as a Brit who has been in the US for quite a while, are you familiar? Is that a phrase you're familiar with, or is that not a reference that you understand?
Well, I do understand it, but I now don't know whether it's because I'm British or American.
It's a quip from Yogi Berra, which I know Jeff can speak to. But
Legend.
That's right. But it just kind of points to that kind of from a numbers perspective, the setup into the year end it's sort of eerily similar to what we saw last year at this time. So let's start with the positives, I guess. So in the third quarter, the XBI outperformed the broader markets and tech, even performing better than the Magnificent Seven, the fabled Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla, which together account for like a third of the market cap of the S&P 500. So XBI did relatively much better than it had done in previous quarters. We're also back to a falling interest rate environment, with the Fed signaling 2 more rate cuts to come by year end. Follow-ons have been working. We looked at the deals through the third quarter, and about 80% of them that raised more than $50 million were up through September 30th. And there was rational market reactions to catalysts, so good data, stocks go up, bad data, stocks go down, that sort of thing. So all of it looking pretty healthy just from a numbers perspective. And then on top of that, as Jeff mentioned in the open, M&A has been picking up, which is, in one sense, that's a pretty critical positive feedback loop because right now biotech is, largely being supported by specialist investors. So when they get a nice return from M&A, they're able to recycle that capital back into other companies. And it also kind of been a bit of a rebuffing, I think, of what kind of was one of the fears that we heard about at the start of the year, was this idea that, pharma was going to just be largely sourcing assets from China and that Western biotechs were going to largely be on their own. So, this run of M&A, I think, has helped to kind of settle down any of those fears that people had.
So, Stephen, let me not rain on your parade, but let me just ask you a couple of things, from your very interesting preview report. Let's talk about valuations and private company valuations. So I think walking in, let's say, to this podcast, I would have assumed that generally people believe that there's sort of a whole general valuation reset that's gone on since, what do we want to say, since 2020 or 2022, I think we looked at. But what I'm looking at here is that, at least in these private companies, and you'll walk us through the logic, it looks like about half of them still haven't reset their valuations. Now, maybe not all of those should, maybe some of them were well valued then, but how are you thinking about that? Is that an adjustment that still needs to happen?
Sure. No, and so this is an analysis we run it's based on an assumption, but I think it's one that I've kind of stress tested with enough VCs that I think it's a fair assumption to make. Basically, that during the overheated public markets that we had from 2020 to 2022, private companies were by and large that raised money were doing this at overinflated valuations, so higher than they really should have been. And sort of then as the bear market set in, these same companies basically had two main ways to reset these valuations. So it's either a new financing, usually at a lower valuation, or you could advance in the clinic and grow into that valuation. So we basically did an analysis to look at how many companies have met these criteria for resetting their valuations. And you're right. I mean, we looked at 3,200 private financings that were disclosed during that 20 to 22 period, and about 53% have still not reset that valuation. And, I think as I've heard in my conversations with buy-siders and VCs, this is just still an ongoing process. And to be honest, I think being about half was actually kind of better than I expected kind of coming into it. I thought maybe that there would still be more that hadn't yet done it yet. But, it's actually even a little bit better if you look at the higher, the companies that have raised more money than others. So we segmented this then down to a cohort of companies that had raised 50 million or more in that period. And there about 60% have done that reset. So it's a process. There are still, companies out there that haven't done it. Just for instance, LB Pharma, which was a recent IPO in early September, their IPO ended up being a significant down round. So they actually hadn't reset their valuation ahead of the IPO, but they chose to do it at the IPO. From what I'm hearing, most investors and bankers and companies would prefer to do that before they come to the public markets. But it's something that definitely needs to happen, because I think some of these valuations, from what I hear, there can be a pretty large mismatch between what the valuation is on the private side and what the expectations are for investors on the public side.
So talk a little bit now about the potential IPO queue. Companies that look like they might be good candidates, because that looked a little healthier.
Sure. So that was sort of then the next step that we took with this analysis was, so we had this cohort of companies that have done this valuation reset and sort of took that as being maybe one of the, let's say, criteria that you need to meet if you want to be an IPO ready company. And then we added on a few more criteria, those being, whether you raised the $50 million or not, whether you're phase 2 or later, and whether your most recent financing round was Series B or later, just because most often most companies don't go from Series A straight to an IPO. So when you do that analysis, you come out with 134 companies that appear to be IPO ready, which is a pretty hefty number. So that's probably more than the market can handle in any one given year, except for a really, really hot sort of boom market like the 2020s. So, I think it means that there are lots of companies that are ready. And from what I hear from the bankers and buy-siders, there are companies that are trying to line themselves up for the start of 2026. We just need to wait and see kind of how things shake out, because sort of as we wrote we've written about throughout the year, while there are all these good things about the numbers, there's still a lot of hesitancy from investors and buy-siders, as Jeff mentioned, to call this sort of a recovery of sorts, because there are all these sort of extraneous things that are weighing on the sector, whether it's MFN that Steve will talk about later, pharma tariffs, uncertainty around FDA, geopolitical issues. All these things are kind of weighing on the sector and kind of keeping the bigger mutual funds, the bigger generalists, from really coming into the sector sort of in a meaningful way. So all these things are kind of what are kind of holding biotech back, I would say, at the moment. And we just I don't think anyone has a clear view as to when that might change. So that's really part of the issue, I think.
Stephen, one last thing, especially on the almost eve of our China Healthcare Conference, we can't really have a discussion of this without talking about China. In fact, you can't have a discussion about anything without talking about China in biotech. I think at the moment, Steve may get to that as well. So, among the IPO candidates, obviously there's a pretty healthy cohort from China, more than from Europe. I don't know if that's a new thing or not. Talk a little bit about what's the state of play in that market and whether those are, all Hong Kong Exchange IPOs that you're thinking about and what the dynamics are there.
Sure. As you rightly point out, of this group of 134 IPO candidates, while a little less than half were from the US, nearly a third were from China. So kind of well outpacing Europe there. And then Hong Kong is really right now, it's kind of really the only functioning IPO market for biotech companies. We've had 12 IPOs there so far, 10 of which have raised more than 50 million. What we've seen lately is it's not uncommon for them to really have a big jump on the first day of trading. And then just looking at the global IPO queue that we've got more generally, I mean, 85% of those companies that make up that queue are seeking a listing in Hong Kong. So, I think this is just a continuation of what we've been spending a lot of time focusing on around the sort of the China trade, the growth of the companies there that are creating globally competitive assets that I know you've written a lot about, Simone, and I'm sure you'll be talking about a lot at the upcoming healthcare summits. And so this is sort of, I think, bleeding through into, what is now a very healthy IPO market in Hong Kong. And it's hard to see where that changes unless, I don't know, Steve, if you have any concepts on whether the China tariffs would have any impact on the financial markets, but it doesn't seem to be anything that's slowing down the Hong Kong market at the moment.
We'll be turning to Steve to talk about geopolitics after the break. There is still time to join us at our 12th China Healthcare Summit. It is scheduled for October 22nd to 24th in Shanghai. We're going to have record attendance from Western pharmas who are joining us to meet their colleagues on the China side of the table to talk about the rise in first-in-class assets. We've done a bunch of analyses on those. You can register for a trial at BioCentury to gain access to the awesome Asia deals deck that Simone did recently, analyzing cross-border deals across the last 2 years. A lot of interesting findings there. Including that biotechs are outstripping pharmas in the race to license assets from China. We're sold out for presenting companies, but there are still delegate passes left. You can go to biocenturychinasummit.com. We'll take a quick break and then we'll turn it over to Steve.
From in-licensing to new co's, cross-border deals from Asia are transforming global biopharma. Meet top decision makers and investors at the 12th China Healthcare Summit to explore emerging opportunities and tackle key challenges in this rapidly evolving landscape. Join us in Shanghai October 22nd to 24th to get a first-hand look at China's dynamic life sciences ecosystem. Register and learn more at biocenturychinasummit.com.
Turning to Washington, a modified version of last year's Biosecure Act passed the Senate last week as an amendment to the Defense Appropriations Act. Steve, what does it mean?
So I think that it means that it's going to be enacted into law. We don't know for sure. Nothing's done until it's done. And in this case, that means it has to go through some kind of a reconciliation process with the House. As you said, it's modified from last year's version. The biggest change, instead of mentioning specific companies, the bill establishes a process to determine which companies will be subject to the contracting restrictions. The criteria are broad enough that any Chinese company could be included or excluded. There's a 5-year grandfathering clause, and there seems to be a way for companies to evade the restrictions by developing a product using a Chinese development service, for example, and then selling that asset to a company that hasn't done so. It remains to be seen exactly how that might work. If it does, it's just another thing, I think, that makes it more difficult for small biotechs to advance products to late stages and to commercialize. The way I look at it, the two Wuxi companies and other Chinese CDMOs act as force multipliers for the small companies. Yes, the big companies, the big pharmas are investing tens of billions of dollars in manufacturing in the United States. That's different from having a company like Wuxi or the other Chinese contract manufacturers available to small biotechs to do that manufacturing. A final thing, the other thing that happened in the House that hasn't gotten as much attention, and I think it actually in the long run, it might be more important, but it's a long run. There's something called the Safe Research Act that was passed as part of the House version of the same bill. That bill essentially makes it impossible for US academics to collaborate on scientific research with Chinese academics that are at institutions that have affiliations with the Chinese military and with certain parts of the Chinese government. It's probably most Chinese academic institutions. If that gets enacted without change, then it would basically put a wall. It would decouple academic research in the United States and China. You can point to hundreds of papers that have been written over the last year that were quite important for basic science that involve collaborations between researchers in the two countries, and that would essentially come to a very rapid end if this law is passed.
Right. And of course, it's going to be interesting, and it'll take years actually to know. It'll be interesting to see how much of a dent that puts in China's research capabilities versus the US's research capabilities. I don't think we've heard of other countries putting that kind of embargo on yet, have we, Steve?
No, I haven't, and I would be surprised, for example, if the Europeans or the UK does anything like that. It's one of these things where it will be probably impossible to measure the impact of it because you can't know what didn't happen that could have happened. On the other hand, you can raise the question, I would raise a question about how restricting basic research collaborations between the two countries benefits anyone. It depends really, I suppose, on your definition of national security. And it's interesting. I think it's part of a bigger debate. I've been at some meetings recently with senior government officials, members of Congress, industry, talking about what does national security mean? What is biotechnology? What is its relationship with national security in the United States? I think that there's a lot of fuzzy thinking going on about that in Washington right now. There's a lot of people who understand or believe that they understand other technologies, the semiconductor industry in particular, and they apply what they know or what they believe that they know about those industries to biotech and the life sciences. But in fact, the differences are bigger than the similarities, and the impacts of the possibilities of having unintended consequences are enormous.
Sorry, one more question, Steve. One of the things that I'm being asked quite often is how much of these changes are here to stay if you take, say, a 2-year, 5-year, 10-year outlook. So let's just assume that any change like this would be at least through this administration. But we do know that China as a national security issue is bipartisan. Any thoughts on your part as to how much of these kind of measures might get rolled back, either by a different Republican or by a Democratic president in the future?
I don't see any reason to believe that they would be rolled back,
including the research embargo?
I don't see any reason. Once it happens, it's very difficult to roll something like that back. There's very little incentive for politicians to do that. One, it would have to involve people saying that they made a mistake in the first place. There's not very many people want to do that. And two, it would require that they make a public determination, not only that they've done something that was wrong, but that collaborating with China, with researchers in China, is a good thing. I would maintain that it is a good thing, but I don't think that there are very many politicians who are going to want to come out publicly and say that. So I can't imagine once something like this happens, there may be exceptions, and that's the other thing. I think that there's especially with Biosecure, where you have an administrative process that's determining which companies are going to be designated as biotechnologies companies of concern. Those are the companies where there are restrictions on contracting with the U.S. government. There's always scope for exceptions and questions about how those the companies that receive exceptions are determined. Whether companies that invest, for example, a lot in domestic manufacturing in the United States would somehow become accepted, whether other companies might be. It's completely unclear how that will work.
And another shameless plug for the China Healthcare Summit. What Steve is saying is just why it's so essential for Western pharmas and biotechs to build their own ties to China to see for themselves what's actually going on, where the innovation is happening, and build relationships.
I would add just one more thing, which is the things that are being discussed right now don't preclude licensing technologies from China. They don't preclude there are things, they're kind of like areas that likely are going to become more difficult or more problematic. Those are around research, possibly around supply chain vulnerabilities in the United States. But at this point, they don't seem to be on the big macro level having to do with licensing actual drugs and other kinds of technologies from China.
Cool. Well, the other issue that you've been following quite closely, Steve, is the so-called most favored nation drug pricing policy. What are you seeing with the latest moves, including, I think, AstraZeneca signed a deal. Of course, we talked about Pfizer, I think, last week.
So Pascal Soriot from AstraZeneca was in the White House on Friday. There's been a lot going on, so maybe people didn't notice that. The AstraZeneca deal is similar to the Pfizer deal. In both cases, there are a lot of really important unanswered questions. The core for both companies seems to be exchanging a commitment to sell all of their drugs to Medicaid at an MFN price, a most favored nation price, and to invest substantial amounts in U.S. manufacturing and R&D. In exchange, they get a 3-year reprieve from tariffs. That was the stick. That was the thing that was really important to both of those companies. There's also a direct-to-patient, a direct-to-business sales component of it. The companies seem to be able to pick and choose what they're going to sell through this channel, and it looks like what they're going to do is they're going to sell certain drugs at their net prices. So what we know about the deal so far doesn't suggest that out-of-pocket costs for American consumers is going to be reduced at all, except for uninsured or underinsured patients who might have the ability to purchase through a direct-to-patient portal. The big question is, what else is in the deals? What's really interesting about this is that the actual deal terms haven't been disclosed. It isn't clear if and when they will be disclosed. People have been furiously seeking them through Freedom of Information Act requests. The administration is preparing Part D and Part B Medicare demonstration projects that are going to have some kind of price restrictions associated with them, benchmarked against most favored nation drug pricing. Will the companies that signed deals with the White House, so far AstraZeneca and Pfizer, but we know that Lilly and Regeneron and others are in the works, will those companies be exempt from the Part D and Part D Medicare demonstration projects? We don't know. Is there something in the deal that prevents the MFN Medicaid prices from setting a ceiling for the 340B discounts? That's another one we don't know. I'm sure that the companies have tried to make that happen. The financial stakes are really large in the answer to that question. And actually, the impact from Medicaid pricing spilling over to 340B is actually bigger than reducing the Medicaid prices to so-called MFN. And by the way, what exactly does MFN mean? What is the formula for that? We don't know that either. Finally, what's going to happen when we get companies like Gilead that are really heavily reliant on Medicaid sales when they have to do a deal with the White House, if they do? Will they be forced into deals that are similar to Pfizer's or AstraZeneca's? The effects would be much, much bigger on a company like Gilead. Or are they going to find some way around it to preserve their revenues? Is there going to be some other kind of ask that the White House would be able to fulfill without decimating their sales? That all remains to be seen. I think one of the most interesting things that's been said about all of this was Mehmet Oz, the administrator of CMS, when he was in the White House talking about the Pfizer deal. He said, we're going to see a string of these announcements all fall. And I think that's a policy that the White House has to keep this in the news. While I'm talking, I'll just say one other thing, which I think is interesting. What I found out last week, there was a pharma board meeting. There was a discussion at the pharma board meeting as to whether pharma as a trade association should seek to make some kind of big grand bargain with the administration involving MFN. That was rejected, and instead each company is going to take its own approach to those negotiations.
All right, thanks for that, Steve. I want to go over to Stephen's neck of the woods, the UK. There's talk that Britain is preparing a spending hike on drugs at NHS. in sort of an effort to fend off the Trump tariffs. Can you shed a little light there?
Well, I'm not sure if it's so much aimed at the Trump tariffs or if it's aimed at trying to stem the losses of investments from pharma companies. What the reporting says, and from what I've heard, and I think what Simone and Stephen have heard, it seems to be accurate, that NICE is going to raise the quality threshold for determining, what prices are kind of worth it from their point of view for providing to people in Great Britain. That's definitely going to be good news for the companies. It's probably going to be good news for patients. The really unanswered question is whether that's going to be sufficient either to bring companies, the big companies that have abandoned commitments to large investments in the UK back, or to prevent other companies from leaving. How are they going to pay for this? And are there other steps that they're taking to try to retain their life sciences industry, which is as a core part of the British economic strategy?
And for those who aren't familiar, NICE is the UK's health technology assessment agency. Stephen, from where you sit, what do you think?
Yeah, I mean, any attempt to bill this as being, driving greater access to drugs for patients on the NHS, I would push back on that perspective just because the way the system works now is it's a very rare occurrence in which drugs are withheld or not launched in the UK because of a inability to meet a nice threshold based on some sort of discount that's provided. So most deals, you go through the nice process, they come out with a quality adjusted life sort of price or cost for the drug. And then if it doesn't meet NICE's threshold, then there's a sort of backroom deal to get down to a price that does meet the threshold. So
I would say one of the things about that is, yeah, that's true. Sometimes it takes a very long time for that to happen. And I would say that in some of those cases where it takes a very long time for that to happen, patients in the UK suffer. And the clearest example of that, I think, is the cystic fibrosis drugs. The back and forth between NICE and Vertex went on for a very long time. Patients progressed with their CF, they suffered, and some of them probably had irreversible progression as a result of that. So it's still a big deal if NICE comes to a deal with the companies more rapidly than they would otherwise.
I just want to say, without belaboring this, because we all said this is going to be a small bit, but anyway, I think the importance of this is really for the industry and for investors and for farmers in the UK, and a signal as to whether this can become a more favorable environment. The traffic has been all one way the last few years, and it's been the wrong way. And so we've had a lot of threats of them coming out, and that's considered to be a real threat to what is a growing life sciences ecosystem and one of the pillars of the country's growth. So I think it may not be specifically around how many patients get the drugs and how much cheaper there are. I think it's really about momentum and whether the government's going to be open to discussion on this kind of thing. Stephen, I could ask you if it's really just this one change in the threshold, is that going to be enough to keep the farmers happy? I'd probably think not.
The likely outcome of a change of increasing the threshold for NICE is that the price the farmers will get back will be higher, or that agreed discounts won't be as large as it had been previously. I think any change to NICE's threshold has to be coupled with a change in how the voluntary pricing scheme that's in place now operates, because the way it operates now is there is a cap on the amount of money the NHS can spend on prescription drugs. And so even if you're increasing the prices that companies are getting, if that cap doesn't change, then they're still just going to be paying a larger rebate back. So these two have to be coupled together. And I imagine it seemed very clear to me from our Grand Rounds conference where Patrick Vallance was speaking. I think he clearly understands that. I think people on both sides of this understand that. But I think you just to remind people that those two really need to come together. You can't have one really without the other.
The other thing, I bring up, and I think I brought it up on this podcast a few times before, is that companies aren't making decisions about investing in the UK in isolation. It's not a coincidence. We're talking about AstraZeneca, one of the bigger players in the UK, right, which has just done this deal in the United States. Part of the deal that they've done in the United States is to make massive investments in R&D and in manufacturing in the United States. The US market is immensely more important to companies like AstraZeneca than the UK market is. And I think that the decisions that they're going to make are going to be driven from both sides, right? They're going to be driven partly by how they feel about changes that have been made or going to be made in the UK that make the investment environment more attractive there. But they're also going to be driven by the need to fulfill the commitments that they're making to their biggest market, which is the United States.
Okay, I've just got one postscript to that, Steve. You know, your point that the US is the biggest market or the most important market, sorry, for AstraZeneca. Well, AstraZeneca is one of the most important companies for the UK across all sectors. It is one of the biggest homegrown companies. I don't know if it's the biggest on FTSE right now, Stephen, or actually on the LSE right now. So the impact of AstraZeneca doing this is different than if, say, Lilly doesn't put that much money here or there. So there's a sort of psychological part of that. And we don't know what the future of GSK is going to look like right now. It's not doing particularly well as a company, but it does have a new CEO, and that's another sort of important local company. So I agree with you. There are so many dynamics at play here.
All right. Love digging deep into the public policy, but hey, billion-dollar biotech deals are back. We've seen an uptick in M&A. We had last week Novo buying Akero for nearly $5 billion in the third and largest deal in a key liver disease class. And Bristol Myers is adding an in vivo cell therapy technology with its $1.5 billion buy of Orbital. Stephen, you followed Novo closely for years now. You've talked to leadership at the company quite often. What's your take on this Novo deal?
I think it makes a lot of sense, first off. I mean, partly just because they reported mid-year this year that they had their own internal FGF21 that had failed in phase 2. So it was a clean fit from that perspective to replace it with one that has shown pretty promising phase 2b data and is now into phase 3. So one of the later stage assets in this class. And obviously, clearly, this is an area, MASH, where Novo is really hoping to expand. They just got semaglutide approved for this indication this year. And so that's, I think, going to be a big area where they're looking to expand the market opportunity for GLP-1s. And an FGF21 clearly it makes sense as a combination option for patients in that setting. So strategically makes a lot of sense. And it's, this is the third FGF21 we've seen acquired recently. Boston Pharma had their asset acquired by GSK earlier this year. And then more recently, I think last month, 89 Bio was also taken out, which also had a late stage FGF21 analog. So yeah, was a hot space, and now I think it's kind of cleared out. All the late stage ones have been bought up. So everything's moving into big pharma hands now.
Yeah, so the Boston deal, that was GSK acquiring one of Boston's assets, $1.2 billion up front. And then with 89 Bio, let's see, that was Roche and $2.4 billion up front.
The prices keep going up and up.
Yeah, there you go. All three programs had phase 2 data at the time of the deals. Our buddy Paul Bonanos, who's our news editor here, he laid out the data for the three assets in a nifty table last week. So I'll drop that into the show notes. And the other deal, Stephen, any quick thoughts?
Yeah, I mean, Orbital, obviously in vivo CAR T, this is a very sort of similar, I guess, to MASH, another sort of hot area or hot technology that we've seen several deals done of late. And so maybe no surprise that, BMS with the investments and things they've made in CAR T or looking to get a platform in that they think if some of the pundits are right, that maybe this is the future of where CAR T is going with in vivo CAR T. So obviously wanting to get their own platform in there. So, no, it should be interesting.
And really a bread and butter deal for the VCs. This is a 3-year-old company, attracted a $270 million Series A round. Initial backing came from A16Z Bio Plus Health and New Path Partners, and the Series A had Arch come in to lead it. Company didn't announce any additional funding after that. And maybe no surprise here, but the chairman, John Maraganore, obviously a big name there, CEO Ron Phillip, he led Spark Therapeutics, which is now part of Roche. And one of the company's co-founders, Nobel Prize winner, I know it's Nobel season, a Penn medicine scientist, Drew Weissman, was among Orbital's co-founders. So quite a star-studded lineup there, and a very quick takeout. So good stuff there. Well, that wraps us up for this week. I'm off to China for the China Healthcare Summit. We'll be doing the podcast live on stage at the summit to wrap things up. We have some great guests, and you all will be in good hands next week with Stephen as your host. And please like and subscribe. BioCentury this week. Thanks for tuning in, and thanks to Kendall Square Orchestra, which provides the music for BioCentury's podcasts.
BioCentury would like to thank Evotec for supporting the BioCentury This Week podcast. To learn more about how Evotec can support your goals through pioneering drug discovery and development solutions, go to evotec.com/innovation.